Hey, what's good, self-direct investors? I hope you're all doing great, and I want to welcome you back to my channel. If you're new here, my name is Jordan. I'm the mind behind Make More Capital, and today we're going to recap this week in cannabis news from July 5th to the 11th. So before we jump in, if you enjoy this video or you learn something, please just leave a like on it as it really helps out my channel. And then of course, if you want to learn how to take advantage of this generational investment opportunity, subscribe below so that you don't miss any future videos. And then there's plenty of content for you to go back, rewatch, and educate yourself with. I've tried to put all the news and facts in one place so that you can watch episodes over time to learn about how the industry has evolved. And then you can identify top companies you keep seeing pop up and take advantage whenever you're ready. But we're going to start with Illinois sales figures for the month of June, which were published late last week. As we can see, sales were very strong as they still brought in $115.5 million, down just a little bit from 116, but as we've seen consecutive months growing, it's very normal to see it sort of stagnate a bit. But the main thing to point out is that despite very strong in-state and out-of-state sales as well, they actually sold more items in June than they did in May. So more people are returning to buy different products and try out different things, which is just showing that the conviction for American consumers wanting to buy cannabis is very strong. And plus, just want to add that I'm pretty sure this is just with Illinois' original 75 dispensaries that they opened up. Recently, they did announce that they'd open up another 75, I believe, plus they would provide social equity licenses, which I imagine needs banking to get going. But regardless, that's been announced. I don't know if it's been implemented or not, but regardless, without that, this signifies very strong growth in Illinois, or steady sales, which is very nice to see. On to Michigan, cannabis sales increased 65% to $149 million in June, as Michigan cannabis sales increased 60% from a year ago to $149 million, similar to May despite having one less day, while the Michigan Marijuana Regulatory Agency breaks out sales by medical and adult use, with medical sales falling 8.8% from a year ago to $41.7 million. But keep in mind, Michigan also legalized adult use at the beginning of 2020 as well, so when you legalize for recreational adult use, again, you can cut out having to go to the doctors to get your prescription, and once you know what you need, you can just go right to the store and get it. So that's the reason for that, down 6% sequentially, and adult use sales increased 140% to $107.4 million, up 3% sequentially. So it's good to see that growth is continuing there, and you can see the breakdown here if you're interested in what got sold most. But again, as we see, flower is always very popular, so it's great to see sales remain strong as we head through the summer. On to Florida, the Office of Medical Cannabis Use. Again, this is just for medical, not adult use, but Florida is very unique because it's a fast-growing adult use market. They added roughly just under 2,000 patients, so the pace is slowing down from what we've seen in the fall, winter, and into the spring, but it seems to be a summer thing. As you know, when you're enjoying summertime, you don't want to have to go to the doctors very often, but regardless, still bringing on patients, which is great to see. Green Dragon opened up a new location, and as we look at sales, though, the breakdown for all of the companies that are competing in Florida, we can see obviously Trulieve's in the lead, but all of them behind them still selling lots of milligrams of THC, lots of milligrams of CBD, and lots of smokable flower. Now, it'd be really cool if we could see the amounts sold translated into dollar figures, and you can attempt to do some napkin math. Now, math's not my strong suit though, so I'm not going to do that, but here's an example that you can try, just assuming that after all costs required to sell flower, that Trulieve might keep $3 a gram or $4 a gram after all is said and done for every amount that they sell. That's just an example. I don't know exactly, but I imagine after they scale too, it's going to be even more cost efficient. But that's one way that you can try to translate how many ounces sold, convert it into grams, and then do all that math. That's not my strong suit though, so I'm not going to bother. But regardless, if you're invested in any of these companies, you just want to make sure that that company every week is seeing at least consistent sales or hopefully growing sales in the amount of milligrams sold, CBD sold, and ounces sold. On to this release from Bloomberg News as U.S. pot stocks a generational wealth opportunity. Not even from me. I know I say that a lot, but that's coming from Jeffries analysts from Bloomberg now, coming from a lot of sources. So Jeffries LLC is initiating coverage on 7 U.S. cannabis companies amidst what the firm describes as a potential generational wealth opportunity. Jeffries analyst Owen Bennett placed buy ratings on all 7 U.S. pot companies that he started tracking: Curaleaf Holdings, Cresco Labs, Green Thumb Industries, Trulieve Cannabis Corp, Terra Ascend, Columbia Care, and Air Wellness, and expects each to double their share price over the next year due to potential growth in the space. Not bad, considering I've been saying this for the last 6 months too. We believe this is a generational wealth opportunity, Bennett wrote in a report to clients on Wednesday. I might have just been a bit early, but regardless, while we had justified reservations when launching on Canadian cannabis over 2 years ago, such caution on the US would be misplaced in our view. Now, I'm going to go through this whole article, and then we've got a Barron's one that says similar information but actually highlights some things that were not mentioned in this one. So I'm going to walk through this whole one. Then we're going to jump to that one, but there's a lot of good information in here, again, highlighting as to why the potential growth is actually like now to come in the next 12 months. Jeffries estimates that the U.S. cannabis sector will grow at a 14% rate over the next decade, which is very big for any industry, especially an emerging one in the U.S., taking sales from U.S. $117 billion in 2020, not 117 billion, sorry. Taking sales from $17 billion in 2020 to U.S. $64 billion by 2030. That growth is expected to come as more U.S. states legalize cannabis for medical or recreational usage, liberalization of current laws restricting cannabis that could usher in a significant amount of institutional investment, and M&A opportunities to help consolidate a fragmented industry, Jeffries says. And this is forecasting the growth into 2030 in dollars by the billions. Bennett expects the U.S. to legalize cannabis federally by 2026, but also sees legislative reform coming sooner than that, either through a new bill widely expected to be introduced this month by Senate Majority Leader Chuck Schumer, or other proposed laws that could deschedule cannabis as a controlled substance or provide protection to capital markets to allow institutional participation in labor. So Jeffries is also anticipating that Schumer is going to drop his comprehensive bill in July. He also noted that valuations for U.S. cannabis operators remain in stark contrast to their Canadian peers, despite how many pot companies in Canada don't have any direct exposure to the U.S. market as cannabis remains federally illegal. For example, the enterprise value for Canadian cannabis companies is 109 times earnings with interest, tax, depreciation, and amortization, otherwise known as EBITDA, while U.S. pot companies is calculated to be 19.5 times EBITDA, according to Jeffries. So, which basically means two things. Either the U.S. MSOs are fairly valued right now, and then their Canadian LP counterparts are just extremely overvalued, therefore there's a lot more chance for the price to drop from where they're at, or the Canadian LPs are actually relatively valued based on what they're anticipating growth for the next coming years, and as those European markets open up, which would then mean that these US MSOs are just extremely undervalued based on their current valuations if they're only calculated at a 19.5 times EBITDA compared to Canadian LPs valued at a 109 times EBITDA, when US MSOs are making about double the money from cannabis that Canadian companies are making. So I'm going to go with the second one. Despite Canadian cannabis industry growth disappointing today, Canada itself being smaller than California, and the companies all generally struggling to make money, valuations are at a significant premium to US cannabis. One of the biggest headwinds limiting the valuations of U.S. cannabis companies is the lack of institutional support, which Jeffries estimates accounts for only 4% of the shares compared to 15% for the Canadian cannabis space. That low figure comes as institutional investors remain unable to invest in companies not trading on a major exchange, a lack of liquidity, and barriers with financial clearinghouses unable to process trades of any cannabis companies, Bennett says. So again, the last few months sell-off what we've seen, it's not retail investors running in panic, but it's the fact that these hedge funds that were clearinghouses and allowing investors to get access to cannabis stocks before no longer allow that. So that's why we've seen the pullback, and obviously it seems like we're heading in the opposite direction, thankfully. But for institutions that currently can't invest in U.S. cannabis, and no doubt they want to, for them to be able to, cannabis essentially needs to be given the okay by the government regulators, such as the risk of prosecution from participation needs to be removed, he noted, and that's exactly what the Safe Banking Act is going to get us in the second half of 2021 if all things go as planned. So onto this article, which highlights basically the exact same thing. I just want to cover some things that were not mentioned. So Bennett thinks the industry will be at $64 billion by 2030, but he thinks the growth will be driven by conversion from the illicit market to the illegal market, which will come with more states coming on board and opening legal access points, the increasing normalization of cannabis use, and the disruption of the alcohol and pharmaceutical industries. That one was not mentioned in the previous article, but that's a big factor. He assumes national penetration can hit 30% with annual spending per user at about $1,750 per year, compared to Colorado, where users typically spend about $2,600 a year, and alcohol in general, where people spend about $1,300 a year. Such assumptions equate to a market of $172 billion, according to Bennett. That's a lot bigger than $64 billion in 2030. Bennett argues investors should focus on companies with the greatest geographic reach in key U.S. states, a sizable presence in California, growing national brands, a broad portfolio of product segments, and existing market share strength, as well as a strong share of wholesale business. With that in mind, Cresco Labs is his top pick, like it was for mine. He also thinks Curaleaf and Green Thumb will score highly. The name that would be most cautious over the next 12 months is Trulieve, Bennett wrote, which is kind of hilarious because Trulieve is the most profitable of them. So if anything, Trulieve's actually the most safe bet, I would imagine. Despite its relatively poor ranking, its valuation is not too dissimilar, and in some cases better. Yeah, well, Trulieve's actually profitable than their higher ranking peers. Regardless, Bennett notes that institutional investors have mostly shied away from U.S. growers because cannabis is illegal at the federal level. But he, like us, expects legal protection to come from lawmakers lawmakers in the next 12 months, pointing to bipartisan efforts in Congress, likely SAFE coming first in the second half of the year. We'll see what happens next year, as obviously Congress and the Democrats try to hold this as a tool to get reelected in 2022. But the most notable among such lawmakers is Senate Majority Leader, who has discussed efforts to deschedule cannabis as a controlled substance. Doesn't even mention SAFE in this article, but that seems to be what they're insinuating. Bennett isn't alone. Barron's pointed to upside for U.S. growers, Curaleaf, Green Thumb, and Trulieve on April 30th. Since publication, Curaleaf's up 4%, Green Thumb's stock is up 11%, and shares of Trulieve are down 3.7%. So regardless, so many reasons to see this opportunity for what it really is. On to this one from Todd Harrison, providing us here with the table of contents for the Jeffries Cannabis Report. Now, I wasn't able to find it, and unfortunately, I imagine you got to pay some decent money for it, but some things he highlights: generational wealth, not just me saying that, that's coming from Jeffries, all names a buy, average upside 100%, barbarians at the gate, 150 billion retail market possible. So what I want to do, though, is just try to rally these off quickly, because I imagine you don't want to just grab the link and read it yourself, so bear with me. I'm going to read through all of these as quickly as possible, so hopefully it's somewhat entertaining for you, and I can try and get through it as much in one go. Let's do it. But also just want to highlight that this is a long report. 157 pages gone into this, so there's some conviction. Generational wealth opportunity, all names a buy, initiate all coverage at buy, average upside over 100%, exceptional industry growth, compounded annual growth rate of 14% into 2030, further M&A to drive additional consolidation, barbarians at the gate, institutional driven re-rating, vertical integration and product mix considerations, preferred name better suited long-term, top pick Cresco, state-of-the-art structure creates unique fundamentals, yet there won't persist federal legalization coming, therefore current headline numbers can be misleading, much better than narrow in our view. While we think California is still strategic must-have, the race for market share in key states is now heating up. Cultivation positions for interstate commerce, large range of valuations across names currently, sizing the market, mature states still growing at 25% a year, that's a big deal. As we expect, more mature rec markets the biggest, with recently rec legal New York and New Jersey to be big contributors. Ohio the biggest state that could move to rec next. Grabbing the illicit market drives initial growth, and then normalization will continue to support. With normalization, wider disruption becomes possible. We think in many cases prevalence is understated. Market size sensitivity, 150 billion at retail, not out of the question. Sizing the market, consumer archetypes and behaviors, U.S. cannabis prevalence continues to rise, while spend and usage shows opposite trends. Relaxation, the main reason given for usage, while usage spans both social and solitary. Females are the fastest growing consumer segment, while an increasing number of older people using. Usage also spans political spectrum, race and relationships, as well as covers a broad range of education and income. Sizing the market, category dynamics and economics. What are the different categories? Flower sales remain robust even in mature states, yet do expect derivatives to make further gains. COVID has driven a change in consumption preferences, price points and economic more supportive in value add, vertical integration importance, retail plays a key role. Also want to note that this is as of July 7th, so very recent and up to date. Vertical integration important in these early days, yet it won't last forever. Near-term risk to own retail. Profitable implications, lots to consider. Wholesale cultivation is not allowed in every state. Extraction and infusion can vary in complexity. Retail is the face of the industry. State structure, fundamental drivers and considerations. Demand levels vary significantly across states. There are a number of states, 15, that stand out as key. Residency requirements limit operations in some states. Current medical demand dependent on patients. Supply is restricted across many states, both grow and retail, while ability to vertically integrate can be very beneficial. Florida could soon see licenses nearly double. That'd be amazing. Taxes and testing expenses have a big impact on pricing. License fee expensive but dwarfed by purchases. Canada tourism, social consumption also to be considered, as does the level of existing illicit entrenchment. Advertising and marketing rules can impact brand building. Market maturity also plays a key role in state development. State dynamics clearly reflected in price points. What will New York and New Jersey regulations look like? Market case study, the devil is in the details. Mature market case study. California case study, what overregulation can do. Oklahoma case study, a lesson in patient access. M&A, a critical tool in these early years, an increasing urgency to scale up quickly. Many deals for licenses in key locations, with some states seeing more activity than others. Washington could mirror Colorado if residency rules change. Expect deals in newly legal recreational states. SPACs have been common and more to come. Expect increasingly more details for strategic assets. Now entering a period of larger consolidation. Doing deals in cannabis is not that easy. MSO deep dive, some better placed than others. Current headline numbers can be misleading. Wide, much better than narrow in our view. While we think California is a strategic must-have, so this is repeating some of what they said earlier. So kind of the summary. New York and New Jersey, key drivers of growth. Branding needs to be at retail and product level, and the race for market share in key states continues to heat up. So regardless, this is big, and this is a reminder that there are forces behind the scenes working to get this done sooner than later. You know, interstate commerce is inevitable, and even the Koch brothers are lobbying for it. Now, just to highlight, coalition of advocacy organizations, including the Koch-backed Americans for Prosperity, published recommendations on how to federally legalize cannabis and open up an interstate market for it without burdening the industry with too much regulation. The white paper was published on Tuesday by the omnibus group, the Cannabis Freedom Alliance, which was launched in April to help generate bipartisan support for ending prohibition. The report pushes for Congress to empower an agency to comprehensively regulate cannabis across the U.S. while endorsing efforts to expunge state-level cannabis convictions. This agency will need to facilitate commerce between state and regulatory regimes and work with state regulators to minimize technical barriers to trade between the states, the report says. Many states will undoubtedly continue to prohibit cannabis within their boundaries, and Congress should respect the rights of states to make their decision, which is 100% true. But regardless, we know that in a lot of the states in America, this is a legal reality today, and this growth is only going to continue. Regardless, the main thing though we want is when these big organizations are getting behind this, obviously they're flexing their power, and it shows just what can happen to the industry. So going forward, it's up to us individuals that, want this space to grow to try and keep it in line with, the values of cannabis and humanity, and not the values of just driving profit at all possible costs. So that's worth keeping in mind, but that is to come in the future. Regardless, big news as Trulieve announces release date, conference call, and webcast for their second quarter 2021 press release will be August 12th. So where we stand today, Curaleaf's going to announce their earnings on Monday, August 9th. Verano's going to announce them on Tuesday, August 10th. Green Thumb Industries is going to announce them Wednesday, August 11th. Trulieve's going to announce them Thursday, August 12th, which is a big week this time next month. And then followed by Trulieve, we actually have the big 5 MSOs rounded off as Cresco Lab announces they're going to report their financials on Friday, August 13th. Now, I just want to remind you that most of the growth we saw last year from these companies came from Q2 to Q3. So just keep in mind that Q1 to Q2, I've no doubt we're going to see some nice growth. But for example, when Cresco Labs went from Q2 sales of 94 million to Q3 sales of 153 million, that accounted for sales over the summer. So what we're going to see next month are going to account from sales from spring into summer, so just keep that in mind. Most likely we're going to see more growth coming in November. Regardless, exciting though, because I do love to cover these videos and provide these updates. So it's a big deal as these big MSOs are going to show off that they are continuing to scale and execute in these legal states. Regardless, Curaleaf International exports over a ton of medical cannabis to Israel, one of the first companies to do so under a new regulatory regime, and I imagine the first U.S. company. So it's great for Curaleaf International. They announced it successfully exported over 1 metric ton of medical cannabis to BOL Pharma in Israel. Curaleaf International is one of the first companies to export medical cannabis to Israel under the country's new regulatory regime. I think the only other one has been Tilray so far. The initial shipment, comprising 2 strains of dried flower, was shipped from Curaleaf's international primary cultivation facility, Terra Verde in Portugal, and is part of a larger supply agreement with BOL Pharma. So it's great that this is getting started. Mind you, it's also good to announce Tilray's Afria RX GmbH subsidiary completes first successful harvest and delivery of medical cannabis grown in Germany. So as much as we have Curaleaf getting into that game, Tilray, which obviously merged with Afria, which was one of the initial ones with a footprint in Germany, is also happy to complete its first successful harvest of medical cannabis cultivated in Germany for distribution to German pharmacies. The medical cannabis harvest is the first cultivated under European Good Manufacturing Practices standard at Tilray's state-of-the-art 6,000 square meter indoor cultivation facility in Neumünster, Germany. The subsequent distribution, which was carried out by a distributor on behalf of the German Cannabis Agency and in accordance with all pharmaceutical and narcotic legal requirements, underscores Tilray's strong foothold and operational excellence in Europe's key medical cannabis markets. So if you are looking for companies on the ground in Europe that are actively growing their presence there in order to try and capitalize on that market in the coming years when regulations loosen, it seems like Curaleaf International and Tilray are the ones with the biggest head start. Now on to this report from Bloomberg. Cannabis could become part of NAFTA 2.0 trade deal, according to former Mexican President Vicente Fox. And it's worth noting that the former president of Mexico has gotten out of politics and into the cannabis space as an entrepreneur. So folks, people are just waking up to the opportunities. It's not too late, whether you want to become an investor, whether you want to build your own brand or start your own business in the space. Regardless, the time is now, and there is some foreshadowing here, which is very positive. Former Mexican President Vicente Fox expects cannabis will be part of the new North American free trade deal following the country's Supreme Court decision to loosen some of the rules on how the drug can be consumed. Cannabis has to be part of the trading between United States, Canada, and Mexico. Fox said in a broadcast interview, Canada is an open market for cannabis, so too is Mexico today. For the moment today for medical use, in September for recreational use. So get this is important because this leads us to believe that he's in talks with lawmakers in Mexico and that they are still working on that adult use bill that they were supposed to have done before the Supreme Court stepped in and just deemed the laws unconstitutional. So regardless, hopefully they can do that by September, because it's already July 11th, and that's only a month and a half away. But regardless, it's good because we don't hear a lot of news out of Mexico on this topic. So this is the first I'm hearing in a while about that. So that would be ideal, especially because Canada's already an open market, and then Mexico's lawmakers can get the job done, which they haven't so far. So there's no reason to believe that they will sooner than later. But regardless, if they can do that, that's a second open market in North America. The longer the U.S. waits at that point, they'd just be shooting themselves in the foot. And big news out of top U.S. sports regulator says cannabis policy must change as White House pressures global meeting. So this is great to see. The rules on cannabis for international athletes must change. The U.S. anti-doping agency said in a response letter to members of Congress on Friday following the suspension of runner Sha'Carri Richardson over a positive cannabis test. Separately, the White House is now reporting seeking a meeting with international sports regulators to discuss the policy. Reps Alexandria Ocasio-Cortez and Jamie Raskin recently sent a letter to the U.S. Athletics governing body on the penalty against Richardson, who admitted to using cannabis in a legal state after learning about her mother's death. Earlier this week, USADA expressed sympathy for the runner and indicated that it may be time for a reevaluation of the cannabis prohibition, but in the latest statement, in a letter to the lawmakers, explicitly calls for a policy change. So that's a big deal. This is actually making stuff change. Awesome. At the same time, the White House Office of National Drug Control Policy is working to secure a meeting with the World Anti-Doping Agency about cannabis policies on the international sports stage. The Financial Times reported on Friday the Biden administration intends to discuss issues including the timeframe for testing and the basis for the consideration of cannabis as a performance-enhancing drug. Which is huge for the American people, highlighting when you voice your frustration, you can help make change happen. Regardless, the backlash on social media has likely helped the top members of these organizations acknowledge that there's a problem. And if you want change, step one is acknowledging that there is a problem, but they've also likely had to educate themselves on the new data and evidence surrounding cannabis. So once they do that and then they see, wait, so the fastest woman in the world can't compete for our country because she smoked a joint in Oregon where it's legal, then yes, it's time to start looking at the rules. So no doubt this isn't going to come quickly, but hopefully it'll come first in changing sports rules, then it will come in hopefully changing the federal laws, which will help improve the legitimacy of America again, help get them back on track if that's their goal, because absolutely, when the laws are just so out of whack and they don't make sense, it's hard to respect any sort of authority. So regardless, this is good to see that change is coming in rules. Hopefully they will in federal regulations. While a federal economic panel says the cannabis industry will continue to grow while they're recommending classification changes, which is good for the legitimization of this industry, as it means steps need to be taken to ensure that it's tracked more diligently under a system that enables analysts to follow markets and publish statistical data. So this comes from a proposal published in the Federal Register last week. The White House Office of Management and Budget described policy recommendations for the 2022 update for the North American Industry Classification System, which is used to categorize businesses and compile data on markets across the US, Mexico, and Canada. The suggestion includes a proposal to move cannabis retailers out of a miscellaneous category and index them separately under a new category where they'll be grouped with tobacco, e-cigarette, and smoking shops. There were further recommendations on indexing cannabis, hemp, and CBD agriculture and wholesaler companies into a specific NAIC category as well. This would make the most sense because it will be its own category. Regardless, this might seem like nominal moves. They don't represent the broader change that industry advocates want to see, but it demonstrates that the federal committee behind these recommendations is acknowledging the growing legitimacy of the cannabis sector and wants to make it easier for economists to research it just like any other business category. And what this makes me more optimistic about is the fact that it's going to be descheduled and not rescheduled, because descheduling would treat it the same as alcohol and allow a more robust industry and economy, and that is essentially better for the people and what we want. So that would be great. On top of that, Nevada Commission approves new rules, will no longer punish fighters for cannabis. This is great news, as in a unanimous vote by the Nevada Athletic Commission on Wednesday, cannabis was removed from a list of performance-enhancing drugs banned for athletes, as they will no longer face any discipline for a positive test. The change comes in the wake of similar rules adopted by the U.S. Anti-Doping Agency in regards to the UFC's anti-doping policy. So this is the first organization, again, changing already, as we see some follow. Much like those rules, Nevada retains the rights to remove a fighter from a bout if they are clearly impaired by the use of cannabis or alcohol. Otherwise, fighters competing in the stage no longer have to worry about a positive test. We should be always at the front runner of these issues, and I believe it's warranted and merited since it is legal in the state. Fair point. NAC Chairman Stephen Klubeck said during the meeting, "I think we need to jump forward being the leader, as we've always been," which is absolutely true. While Kevin Durant smokes more weed than you would think, says author who followed the Brooklyn. Is this even a surprise anymore? So let's see what it takes to become one of the most elite basketball players on the planet. Kevin Durant enjoys his cannabis, says Matt Sullivan, who followed the Brooklyn Nets for 2 years to report a book about the National Basketball Association super team. Sullivan made the claim while appearing on the Dan Le Batard Show, reports Sportscasting. He smokes even more weed than you would think, Sullivan reportedly said. I was at his house at 1 o'clock in the morning. The entire place just reeks. He doesn't have a girlfriend. He doesn't go on crazy vacations. He doesn't do anything other than hoop. Like nothing. He's boring as hell. So going out with him is just blazing. Snooze won't be a surprise for KD superfans, as the 11-time NBA All-Star has been an investor in the cannabis space for years. Everybody on my team drinks coffee every day, taking caffeine every day, Durant said, or guys go out to have wine after games or have a little drink here and there. Cannabis should be in that tone. Why are we even talking about it? It shouldn't even be in the conversation now, which is 100%. But the more he opens up about this, the more it does help normalize. So thank you, Kevin, for doing so. Regardless, it's funny though, because still Durant and other NBA players who are competing for a spot on the Team USA will need to stay cannabis free if they wish to partake in the Tokyo Olympics. So in May, a memo was sent out to all 30 NBA teams reminding them the participants will be subjected to the World Anti-Doping Agency testing, which includes narcotics, performing, enhancing drugs, and cannabinoids. But it takes Sha'Carri Richardson to defy that and just, do what she needed to do in the moment to create this big stir that's helping change the rules. So regardless, one athlete at a time, we love to see it. And so lastly, this is an article from Morningstar. Still a long road to legalizing cannabis federally in the US, but investors can still find value in their cannabis stocks. Keep in mind, the U.S. cannabis stock. So just wanted to highlight this article. I'm not going to go through it, but the signs of a sea change in support for legalization are as clear as they've ever been, and they're getting clearer by the day. Medical and recreational cannabis is legal or set to become legal in 19 states and Washington, D.C. Medical cannabis only is legal in 17 states. High THC cannabis for any purpose is legal in 14 states. As we go down, federal law still stands in the way of legalizing cannabis. Well, main things is scientific research is very difficult to conduct, including any studies on efficacy, potency, and safety. Mind you, with the recent changes from the FDA allowing more research, this is good to see that is slowly changing. And of course, when cannabis is descheduled from the Controlled Substances Act, that will allow that, and that requires reform in order to do that. Any industry that does business with or serves the cannabis industry could be considered aiding and abetting criminal activity, and that is why so few banks have worked with these companies or so few investors are still invested, while U.S. companies pay very high tax rates. Regardless, it doesn't stop them from being nearly profitable and executing in their legal state. So these are things that are all going to change in time as reform does take place. Now, the path to federal legalization, wanted to highlight this because it has four things: national legalization, states' rights for recreational medical cannabis use, states' rights for medical use only, and banking. So the greatest trick the American media will play on people is making them believe that they need federal legalization for these cannabis companies to have success, which is absolutely not the case, because the companies already have success. What investors like us need to benefit from this is we need to see banking, which likely will come in the second half of this year because that bill is not going to get passed, and the Safe Banking Act does have the votes in Congress apparently. So we're likely going to see banking, which is going to be the first catalyst. Then that means we can eventually see a slower, drawn-out process of moving to states' rights for medical use only, then states' rights for recreational medical use, which would lead to national legalization. So do not let that make you believe that national legalization is needed for these U.S. cannabis companies to have success. They're already having success, and the more that we reform the laws and ease the restrictions on them, the more success they're going to have, the more valuable they're going to become, and the greater return on investment it will eventually serve us, patient, long-term, self-direct investors that do our research and take advantage. So that is it for this week's episode. Just wanted to highlight that, folks. I want to thank you so much for tuning in, and I really hope you got some value out of it. All the links are available in the description below if you want to grab them, and please let me know in the comments if you have any questions or concerns about anything that I missed or that I did cover that you think differently about. Let me know so that we can have a conversation. Besides that, if you enjoyed it, please leave a like on it, subscribe so that you don't miss any future videos, and I will catch you on Wednesday for a midweek update. Have a great week, everybody.